Hey, what's up, everybody? So today there were two trades that I closed. One of them I lost money, and on the other one I made some money. And I'm gonna break down both of them today, show you guys exactly where I entered, where I exited, what I was thinking about, and what I learned throughout this process. Because many times there's more value in seeing the real trades, the wins and the losses, than just watching somebody only show you their highlight reel and only when they're winning. So let's get into it. So just a reminder, right? If you guys are new to this channel, my name is Brandon, and I have a background in finance, and I've been trading options for about 5 years, and I'm working on improving my method every single day. And this channel, I'm going to show you guys some trades, wins, the losses, and everything I'm learning along the way. So for quick context, so what you guys are seeing right here is the S&P 500 index SPY, the ETF, the Exchange Traded Fund, and it just tracks the top 500 companies in the United States. And um, this week is a holiday showing week because of Thanksgiving, so volume's a lot lighter than usual, which means that the market can be pretty choppy throughout the time. So price is consolidating. It doesn't pick a trend of whether to go up, whether to go down, and that's going to matter a lot, throughout my explanation of the play. So without further ado, let's talk about SPY. And in this play, I got in yesterday, the 24th on Monday. So I'm going to click on the replay bar button and just show you guys. I got in at around 2:04, so I'm on the 5 minute time frame right now. And if I were to go down to the 2 minute time frame, I'm looking at this on the 2, 5, 15 minute time frame. And right now, um, I'm noticing that price closed is this is at the end of the day. So this is Monday right here. You can see it changing, and I got in at about 2:02. And the reason why I got in because on the 5 minute, I noticed that price had touched the previous day high, and I'm thinking it was going to break out from it. But I should have known better that many times when you're trying to chase a breakout, that's when all of the buyers are chasing and the sellers take over. So that's kind of what happened for a little bit. So if I just to speed this up a little bit, right now we're to zoom out, you can see that I got in here at around 669 and change, thinking that price was going to go up because it broke up a little bit around here. It didn't break all of them, but it broke a lot of them. So the high here was about 669.73, and this high was about 75. So it didn't break up. It didn't break of it, but it came down and then it rebounds because it touched the top here the day after. I noticed there was a big drop right here for this 5 minute candle, which was the open of Tuesday today. So I had a stop loss at about 20%. And because I had the stop loss at 20%, I avoided this downturn that I could have lost over 55% on those SPY calls. Price ended up recovering, not gonna lie. And these calls, although I got out at 325 and buying it at 417 and only losing $94, ended up going to over 600, over $6. But that's okay because it's all in hindsight. Like the fact that I sold here, avoided this, sorry, bought here, sold here when it hit previous day high and it came down rushing, boom, right? This was yesterday's close, this was today, opened there, came down, and then it kept coming down. So that's fine. I'll take it. So that was SPY. Um, so sometimes when that happens and you get stopped out, it'll mess with your head. But when you look back in hindsight and you're like, oh wow, I prevented it from coming down, then you feel good about yourself. Even though afterwards it ended up coming up. That's the game of the market. So, just as a takeaway for me, my entry it wasn't horrible, but I misread the breakout. So it could have been better. It was a false breakout. So some people call it a trap. And the consolidation after the highs were taken out as a warning. So I should have respected it. But it's important. Stop loss did his job, and that's that. So that's the losing trade. Now let's jump into the winning trade. So Meta, we got Meta, aka Facebook, and this is the 5 minute channel as well. And this is a different setup, so you're going to see a different outcome here. So what I saw here was a double inside bar. So here, right, if you were to look, you'll see the one here under it, but this right here is indicative of consolidation. right? So these two bars right here, right, means that price here is under this one and price is under this one. So it's figuring out where to go. Is it going to go up? Is it going to go down? Whatever. So it's consolidating. So I kind of jumped the gun. I'm not going to lie. And because the price here made a higher low and didn't go below this, I kind of jumped the gun, and got inside this inside candle. Should have waited for it to go up because I bought calls. Unfortunately, this one came down, so that had me a little trickled. I was like, oh, heck no. But because it didn't continue down, I didn't have to cut. It was still finding its price around here in this range between 627 and 624. And it broke up a little bit, but it's been hitting this Fibonacci point. Again, Fibonacci points are just points where price tends to reverse. So you can see here, it hit it up, came down, hit it up, hovered, hit it up, came down, hit it up again, and it finally broke out. And on the 5 minute, like I said, I got it on the inside, held right, and then ADR per ADR, average day range, tends to be where price reverses, which is where you see here I sold because I got stopped out. So when price hit ADR, it came back down for the next two five candles, and I got stopped out on this candle right here. It came down a little lower, and then it kept pushing up. That's part of the game again as well. The goal is to not lose money, preserve your capital. I could have saved some, but I wasn't really liking the contracts, the theta and the delta. So theta is time decay. It dictates how much value of the contract you're going to lose based on how close the contract is to expiration. And delta is, it tells you how much the contract goes up based on the price movement. We could do a deep dive about that later, but I just wanted to give you guys a high level. So I have bought one Meta, a 635 call expiring next week, December 5th, for about $1,020, and I sold for about 1,117 at the stop loss. Again, it wasn't as much volume normally compared to what you would normally see. So we're looking at Meta right now, and Meta average volume is 22 million. Okay, so there was 25. There was about 25 million volume, and if I were to just place the volume indicator, you could see that a lot of it came at the end, at the beginning. This is red because there was a lot of potential selling here, but we will see. Okay, so I made the decision to sell, put the stop loss, and I made 10%. Walked away with the profit, a little over $92, $94. And I guess the takeaway here is that your exit strategy, matters just as much as your entry. So I could have had a better entry, and I could have held and bought a further out, but the contracts were more expensive. So even then, I shouldn't have been risking that much. But it was important for me to put a stop loss so that if it comes below the price that I can no longer hold, I'm okay selling it. So just some quick takeaways as a wrap up. If we're zooming out, what did today teach me? The first is that cutting losses saves you. Nobody wants to lose. Nobody does. But if you cut your losers quick, again, then you have a higher chance of winning over the long run. So the spike could have been a 50% loss, right? If it came down here. But luckily it wasn't. It ended up just being a 22% loss. So, it wasn't fun, but I survived. And the second thing is that entry matters. So on SPY, I jumped on what I thought was going to be a breakout. It wasn't clearly. And on Meta, I entered on the early consolidation pattern here. And, luckily it ended up being confirmed, but my luck could have went the exact other way. So, this is a reminder for me that better entries give me, more, a lower chance of me making a mistake, finding an error, etc. So you're always trying to decrease your risk. And then the third thing is have an exit strategy and know yourself always. So I took profit on Meta, maybe a little earlier than I should have, but based on like how comfortable I was with the specific contracts that I had, and I knew where my head was at. And low volume week, I was like, I would rather not be in the play. Let's just take the 10% and run with it. So try to protect my capital to trade another day because I don't want to be consistently losing. Right? The goal is for you to win more than you lose. You don't have to necessarily win more trades than you lose, but if you win more in quantity, then that would be, ideal. But ideally, you would want to win more trades and lose more than lose trades, and also win more in quantity and have a higher percentage rate than not. Okay, so we're at the end here. I review these two trades, SPY and Meta. Takeaways is cut your losses early. Your entries matter, and your exit strategy is super important, which is something I'm working on doing. Normally, I would jump in without a stop loss, but because I'm monitoring it, but I'm finding that I have to put an automatic 30% stop loss, and then just move it up as prices goes up, and always try to buy contracts for their expiration date. So if you guys got value from this, drop a like the video, subscribe, drop a comment, let me know. Would you have handled the trades differently? What are you guys seeing that I'm not? Curious what you guys would have done. And if you guys are really interested in more, real trade breakdowns, what my losses, my wins, that I probably should have done this differently, etc., hit subscribe because I'm going to be posting some more. And I'll see you guys in the next one. Peace.